Hey everyone, welcome back to our channel. In today's video, we're diving into the world of depreciation, what it is, why it matters, and the different methods you can use to calculate it. Let's start with the basics. Depreciation is allocating the cost of a tangible asset over its useful life. It's important for businesses because it helps spread out the cost of an investment in an asset and matches the expense with the revenue it helps generate. Think of it as a way to account for the wearing out or reduction in value of an asset over time. Depreciation applies to assets like machinery, office equipment, and vehicles. For example, buying a delivery truck for your business will not stay in perfect condition forever. Depreciation helps you account for that decline in value. There are two main methods of calculating depreciation, each suitable for different situations. Let's break down the most common ones. The first method is the straight line method. The straight line method is a way to calculate how much of an asset, like a piece of equipment or a building, loses value over time. This process is called depreciation. Here's a simple breakdown of the equation and how it works. The equation is depreciation expenses equals useful life cost of asset minus salvage value divided by useful life. Let me explain the equation. First one, cost of asset. This is how much you paid for the asset in the beginning. The second one, salvage value, the value of the asset at the end of its useful life. The third one, useful life. This means how long you expect to use the asset. For example, imagine you buy a machine for 10,000 rupees. You expect it to be worth 1,000 rupees at the end of its life and plan to use it for another 9 years. Using the formula, cost of asset equals rupees 10,000, salvage value, which is rupees 1,000, and useful life is 9 years. So, the annual depreciation expense is depreciation expense equals 10,000 minus 1,000 divided by 9, which will give you 1,000. You record rupees 1,000 as depreciation expense for the machine each year. This helps spread out the cost of the asset evenly over its useful life. The second method is the written down value method. The written down value method, also known as the declining balance method, is a way to calculate how much an asset depreciates over time. Unlike the straight line method, which spreads depreciation evenly, this method calculates depreciation based on the remaining value of the asset each year. Here's a simple breakdown of the equation and how it works. The equation is book value at beginning of the year multiplied by depreciation rate. Let me explain the equation. Book value at the beginning of the year means this is the value of the asset at the start of the year, which is the original cost minus any depreciation already recorded in previous years. Now, depreciation rate. This is a percentage that represents how much value the asset will lose each year. It's usually set based on the asset's expected useful life. For example, imagine you buy a machine for rupees 10,000 and you use a depreciation rate of 20% per year. In the first year, the book value at the beginning is rupees 10,000. The depreciation expense is rupees 10,000 multiplied by 20%, which gives you 2,000 rupees. The book value at the end of the year is rupees 10,000 minus rupees 2,000, which gives you 8,000 rupees. In the second year, the book value at the beginning is rupees 8,000, which is the value at the end of year 1. The depreciation expense is rupees 8,000 multiplied by 20,000, which gives you rupees 1,600. The book value at the end of the year is rupees 8,000 minus rupees 1,600, which gives you 6,400 rupees. In this method, the amount of depreciation decreases each year because it's calculated on the declining book value. This means that as long as the asset ages, it loses value at a slower rate. Choosing the right method depends on your asset, its usage, and your financial strategy. If you found this video helpful, do not forget to like, subscribe, and hit the notification bell so you never miss out on an update. And if you have any questions about depreciation or want to share your experiences, do drop a comment below. Thank you so much for watching, and I will see you in the next video.